with market strategist Marta Norton with an assets under management of $1.8 trillion. And Marta, I want to kind of pivot back. You heard from Christopher Waller, but then we've had several guests on Fox Business today say it's not about the inflation report. Powell is more focused on the jobs report. I had spoken with the labor secretary. I'm going to be speaking with her. That interview is going to run tonight on Maria Bartiromo's Wall Street. And I asked her about where the focus would be for the report. She told me private payrolls. So it seems that if we get that weaker report, that bad news could be good news for that rate cut.
I think that's right. So if we hearken back to the Jackson Hole speech and we look at what was the real change in tone that Powell had vis-a-vis the July press conference, what you really saw was him honing in on the downside risk to the labor market. And of course, we know that the real new information we had over this period was not just a new payroll print this past month, but also revisions to prior months, which made for a very weak trend when it comes to payrolls. And we know that, of course, that features very highly and very importantly in the Fed mandate with this focus on full employment. So it really does seem like if we continue to see that type of number come out in next week's report, that we are looking at a September cut.
Yeah, you also talk about quarterly earnings and that, really quarterly earnings in your view have come in, reasonably strong. There's been some tariff commentary and there's been some, some kind of geopolitical commentary depending on the company. But you also point out the tariffs may be the drag this current quarter that we're in. What are you seeing? What are you hearing?
Well, I guess the idea here with tariffs is that the expectation is that's a longer term cost. We know companies have been quite nimble. We've seen that in real time as they've been able to put off the tariff costs, negotiate, reposition. But we also know that maybe those tariff costs haven't even been fully in effect because they haven't known what that rate is. But as we've started to have some of these tariff deals come together, it's at a point where we could start to see some sort of tariff drag on earnings. And that relates both to Q3 earnings, Q4 earnings, really the longer term picture. But at the same time, we have these offsets. We have these boosts to earnings, whether that is related to the 100% expensing from the One Big Beautiful Bill Act, or whether that relates to AI. So there's this push-pull going on with earnings.
Yeah, and you say that if you look at the catalyst for disappointment, just want to point out the risk, because September,
right.
Look, history shows that September can be a rough month, and with the market performing so strong, I mean, I've been doing this for 20 years. I'm sure you have too. So, I'm like, oh, September could be kind of a rough month. But that's the thing. I mean, maybe you do want to kind of tell your clients, like, brace. There might be a little bit of some rough waters, even with a rate cut in September.
That's right. And I think one of the key things that brings that idea of kind of reining in expectations to mind is just where valuations have been. You mentioned it yourself, how strong the market has rallied, and that has pulled valuations up, not just for technology. They're certainly very stretched in technology, but also in areas like industrials, like utilities, financials as well. All of these areas are a bit more expensive. The expectations are just quite high. And so that creates its own space for volatility, not to mention the seasonal weakness.
One of the top stories in our correspondent, Lydia, who just covered it from the courtroom, was obviously, or from the courthouse, was this move by President Trump to fire Lisa Cook, one of the Fed governors. Right. Is that something that's being discussed right now with you and your colleagues? And what are your thoughts on that?
I mean, you mentioned it, making history. This is obviously unprecedented, so it's hard to ignore. At the same time, the market is ignoring a bit this idea that there's massive risk to Fed independence. I think the few things that you would look for with real market fear there is an extremely steep yield curve, a term premium, that uncertainty premium growing as investors wonder whether the Fed will be able to really tackle inflation, and then, of course, dollar weakness. And we have seen those trends over the course of 2025, but we haven't seen them exacerbated as this Cook conversation has taken center stage. So I think it's something that people are watching, but whether that really compromises Fed independence is still an open question.
One of the things you mentioned is small caps and healthcare. So you're getting I don't know about the small cap side, but on the healthcare at least, a little defensive, a little bit.
Yeah. Yeah. I mean, I think the real argument on both fronts. Now, I'm a believer in the AI trade. I think having exposure to that area of the market, that's a secular growth theme, and frankly, it benefits the broad market. But you're also, at a time when the market is so expensive, it's really great to be able to find pockets of valuation opportunity. And that's true for small caps, which to your point are economically sensitive, so have some risk embedded in them, but healthcare as well, which is a bit more defensive. And at a certain point, the valuation gap can get so extreme that valuation gap, that price level, is a catalyst in and of itself. So it's not necessarily saying this is going to turn around right away. There are headwinds there, but I think there should be space for valuation opportunities like that in someone's portfolio.
One other point before you go, I was looking at this consumer sentiment number today. This is the first time we've seen it fall in 3 months. And, we've had some other data, some other surveys that have shown us some trepidation by the consumer. But we really haven't seen that play out in consumer spending or retail sales. Do you think that might shift?
Well, it's such a disconnect between how someone feels and how someone behaves. We know that from our personal lives, and we also know it based on this data. I mean, we saw such a plunge this year in sentiment and confidence, and yet the consumer has held in there. So I don't dismiss that data out of hand. I think it's something that we want to watch, we want to take note of. There can be a vibe shift, but I think a lot of the concerns that people had, the shift, the sea change in global trade, that was going to immediately mean higher prices, that didn't really come to effect, and so maybe consumers softened out, but the fears, the nightmares, they haven't completely gone away. So there is still, kind of the consumer on edge, but it's important to watch what's happening with actual dollars.
All right, and we certainly are, and as are you. Marta Norton, thank you so much for being here. Really appreciate it. Enjoy your Labor Day weekend.
Same to you.